What will happen if you can't file your tax on April 15th? It's tax time again, and the deadline for filing tax returns is right around the corner. There are scenarios that might cause you not to file your tax or not to pay your tax bill on time. Let's discuss the consequences if this happens to you. You missed the April 15th deadline. If this is you, you might still be in good shape. Filing late will incur a 5% penalty based on the amount you owe. This penalty will max out at 25% depending on when you file. If you wait too long, let's say more than 60 days, this penalty goes up to 100% of your tax bill or $135, whichever is less. The best thing you can do in this instance is ask for an extension, which will give you an extra 6 months, allowing you to get the money together and pay your tax bill before receiving penalties. You may also want to consider using your credit card to pay off your tax debt. Having a small interest fee is much better than having the IRS breathing down your neck. You filed on time but haven't paid your tax bill yet. You will still incur some penalties from the IRS, but they will be much less substantial. A small fee of 0.25% per month is added to your tax bill as long as you make arrangements with the IRS in advance. Again, consider using your credit card to pay your tax bill. This will save you money on fees and interest rates also. You didn't file your taxes or pay your tax bill. Now we are getting into serious territory here. Not filing your taxes or paying your tax bill could become a very big headache for you and your accountant. You will receive penalties for both transgressions, including a 5% failure to file fee and a 0.5% late filing fee. Besides those fees, you will also incur an additional $135 fee or 100% of your tax bill, whichever is less if you pass the 60-day mark. Factor in the 3% daily compounding interest charge and your new tax bill could be financially devastating. Don't let these fees ruin you. File your taxes and pay your tax bill on time. Doing so will save you money and a lot of stress in the long run. Setting up a payment plan through the IRS is another way to alleviate the stress of a tax bill, and doing so will ensure that you get to keep your possessions and not file for bankruptcy. You can even use your credit card to set up the payment plan so you don't have to think about it every month or risk making a payment late, which could cause the IRS to cancel the payment plan altogether. Although some of these examples may be extreme, they still occur every year during tax time, and the IRS is willing to work with those who act now. Taking action now is the best way to handle your tax problems. Don't wait until it's too late.